So Neil, the audience wants to know, with President Trump's proposed tax changes still pending, what other changes would you suggest if you had the opportunity?
Oh, that's a good question. What would I do? If I could wave a magic wand. Okay, so
Mhm.
are we talking politically realistic or wave a magic wand kind of thing?
Last one, wave the magic wand.
Okay, wave a magic wand. All right. So I think the real tax system should be a net income tax. So what we have now is a quasi gross income tax. So when you file your tax return, you have your sources of income, you have your W-2, you have interest, you have dividends, you have stock sales, you have profits from businesses, you have retirement income, all these different things. And they'll get added up and they create your adjusted gross income. So it's not pure gross income because it's adjusted, but it's close, right? And then you have a couple allowed deductions, like the standard deduction or the qualified business income deduction, but then that's it. Okay, so it's adjusted gross income, a couple allowed deductions, and then taxable income. And then your tax is calculated on that taxable income number. And then maybe you get extra things on the back end if you have kids and you get credits for those. Maybe. It just depends on the numbers. So what I would rather see is have everybody operate like a business. So people say it's so unfair that businesses can write off all this stuff. And I agree that it is unfair because the rules are different. So a business brings in money, spends money, and pays tax on the remainder. Whereas a person brings in money, pays taxes, and spends the remainder. So I would rather have individuals and people taxed like businesses so that they bring in money, they spend whatever, and they're taxed on the remainder. And effectively, that would be almost like a mark-to-market account, where if you're like a professional stock trader, you don't pay tax on every individual stock trade. You pay tax on the beginning balance of your account versus the ending balance of your account. So that's the mark to market adjustments. That's what I would rather see because I talk to people all the time that says, okay, two is, I don't know, $85,000. Last year was 78. You made $8,000 more, right? Or $7,000 more. And every single time the response is exactly the same. They said, really? Where did it go? And I because you spent it, right? Fundamentally. So part of it was taxed because your payroll taxes went up and your income taxes went up. But part of it you just spent because the cost of living went up. And as you have more money in your pocket, you're more likely to spend it. So the net effect is that people might be earning more and more basically due to inflation, but they're not saving anymore. You can look at all kinds of charts about net savings rates. You can look at studies come out regularly saying X percentage of Americans can't afford a surprise bill of $400 or $1,000 or whatever it is. So, what if we're going to have a tax system? I think the fairest way to do it is on a net income basis so that everybody operates like a business. So you bring in money, you spend money, and then you're taxed on the remainder. And then you can argue about what that tax rate should be, right? Because one thing to keep in mind is, granted, we don't have a purely closed economy, so money does leave. But fundamentally, if you're spending money, it's ending up in someone else's pocket somewhere. The net tax should to whoever it accrues to, but the base for the tax assessment should be constant. Okay, because if you deduct it, somebody else has it as income. And that would actually spur economic activity because it would increase the velocity of money. So you're incentivized by whatever tax rate to spend that money rather than saving it, which will, get more people buying stuff effectively. Now, the caveat with that is that it's always a percentage basis, and it's the same discussion that we have with people towards the end of the year. They say, should I buy a car? Should I buy a boat? Should I buy a computer? Should I buy this? Should I buy that? Okay. If you buy a business asset and you're operating as a business, then you can deduct that business expense and subject to all the different things that it's subject to, limits and depreciation and all this kind of stuff. You're only ever getting back a percentage of the amount you spend in tax savings because taxes are never more than 100%. They're, going to be 37%, 21%, whatever. So you're still spending the money, right? Even in a net tax situation, you don't want to spend money on things that you're not going to use and buy anyways, because the math doesn't work. It's not worth spending a dollar to save 30 cents, right? If you weren't going to spend that dollar anyways. It's the only caveat with that. But yeah, if I could wave a magic wand, net income tax on everybody, not an adjusted gross income tax.
Love it. Like that idea. So looks like we're jumping into a real estate question, Neil.
Okay.
Question that is.